If you've ever bought gold at the support, only to watch the price crash against you, or even sold gold at the resistance, only to watch it spike up against you, this video is for you. Today I'm going to show you my exact 3-step trading strategy that I use for trading gold. We will cover market structure, identification of key levels, and then confirmation and entries. Now, if you don't know me, my name is Ibrahim Okech, and without further ado, let's get right into the first step. Now, when you look at our first step, and that is identification of the market structure, look at your charts, whether you have higher highs and higher lows, and this will help you determine if you're in an uptrend or the market is pushing to the upside, the bulls are in control, or if you're forming lower lows and lower highs, that way we are in a downtrend. So then we look for selling opportunities. We are bearish, right? I'll just show you that in the charts in a moment. So right here we have gold in the 4-hour time frame. As you can see, we've been forming a series of lower lows and lower highs, lower low, lower high, lower low, equal high, lower low, pull back, lower high, and you have this other break. We already know that if you're pushing to the downside, you usually have lower lows, lower high, lower low, lower high, lower low, lower high, then the lower low. And this will give us a downtrend market structure. And whenever we are pushing to the upside, we're going to have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And this will give us our uptrend. So for this case, we're seeing gold has been pushing to the downside, which gives us this scenario called the downside. And whenever we have the market pushing to the downside, we are looking for buys in all that, we are looking for sales in all that we do. So with that said, we're going to go ahead and just mark these levels. This is going to be a higher high. This is going to be a higher high. Why is that? That's because initially we have been pushing to the upside. You can see here we formed a high, a low, a high, a low, a high. Now from a higher high, we dropped straight and formed a higher low, then a lower high. Lower low, lower high, lower low, lower high. As simple as that. So from here, we pushed down and form a lower low. It's a lower low because this is the last low that was formed after formation of the higher high. So let's have our lower low. Sorry, it's a lower low. Right here we have a lower high, a lower high, just like that. You can see we have a lower low, we have a lower high, we have a lower low, we have a lower high. Okay, it's as simple as that. Our market structure tells us clearly that gold is in a downtrend. Now this tells us what? Whenever we are now trying to look for whether an entry, our setup, in our minds we know that we should follow the upper trend, which is saying sells. I'll just go to the next step, which is identification of the key levels. With key levels, this can be support and resistance, can be supply and demand. Some people use imbalances and fair value gaps, depending on whether they're trading price action, be it SMC or ICT. But in my approach, I'm going to use support and resistances. So I'll just go ahead and remove all this and go to the 1-hour time frame. Since you already know that on our 4H, we determined our market structure, and we said the 4-hour is bearish. Okay. Now we're coming to our 1-hour to identify our key levels. This is the 1-hour time frame. You can see that the 1-hour time frame is as well pushing to the downside. Okay. You can see we had this initial push right here. This is a pullback, correction, push, pullback, push, correction, pullback. We formed equal highs and price dropped, breaking this as well. So we can see that our 4-hour time frame is also in the downtrend. So what you want to do is look for a point in time where we are having the push, because whenever if you see this correction happening, this correction is in the buy side, which is against the 4-hour trend. We want to wait for the 1 hour to align with the 4-hour, and then you can take the trade. I'll just show you that briefly here. Let me remove these drawings. Sorry again, we said our market structure on the 4-hour was bearish. Okay, so if I go back to the 4-hour time frame, and then you see the movement that happened here. We said you had a push, a pullback, push, pullback, had a push, pullback, push, pullback, push, then a pullback. So whenever you're having this pullback, this is normally against the trend, okay? Because remember we are selling, but then this pullback's happening at buys. The pullback happening here, buys. The pullback happening here, buys. So you want to wait for the buy, there the correction to get done, and then you flow with the push or the impulse. So with that said, I'll just go back to the 1-hour time frame. Remember when you have this push here, remember when you had this push to the downside, wait for this correction and then take the trade to the downside. I'll show the structure clearly on the lower time frame. That's the 1-hour time frame. So I go to the 1-hour time frame. Let's just check that. So initially, when you had this push to the downside, price started pushing back to correct, okay? Pushing back to form a lower high rather. So we pushed here, we had this market shift, price came back, lower low, pushed up higher high, came lower low, it pushed up and failed to break structure, came back down, and then finally broke structure here. But then what do we see? We see a huge bearish momentum. As you can see, sellers are strong in the market. You can see the momentum that they caused right here, causing us to break just below this, giving us a market shift. And then what? The 1 hour started aligning lower low, lower high, lower low, lower high. And this is how I catch the trade. Now, whenever you have that market shift, I would then mark the fair value gap, or just mark this as your resistance. Same here, another resistance right there, okay? Another one, just here like that. And those will be my key levels. Simple, you can just draw your key levels where you have many touches, at least 3 or even 2 touches, okay? So with that said, I am done with identifying of key levels. The next step is going to be our entry and confirmation, and this is going to be done on the lower time frame, the M15, or the 5-minute time frame, the M5. So I'll just go ahead and show you guys the entry and confirmation that I used to catch 2 trades on the 15 minutes time frame. If I go to the 15 minutes time frame, we are going to see that for the first case here, after we had that market shift, we had price pushing back to the upside, okay? Gave us confirmation. One of the candlestick pattern, an evening star, right? And then you also have a bearish engulfing bar. At the same time, we have equal highs. And this is enough confirmation for me to take the trade. Take your entry here, put your stop loss just above the high, and then your stop loss, your take profit will just be to the next low, and your stop loss just above this high. And for the next scenario, just here, you can see we had price trying, after this push, we had price pushing back to the upside there. Okay, after this push, we had price pushing back to the upside. And simply what you can do here, you can see most people expected price to come back to this, maybe demand zone and buy. But yes, they were right, okay? So what you do, we see price pushed here from the lower low, from the higher high, a lower high, this equal highs, okay? And then you have this shift right here. So someone would then just take a trade somewhere here, putting the stop loss above this high or even above the resistance level, and taking our profit just 1 to 2, just like that, 1 to 2, and would be having two nice beautiful setups with the trend. And again, you can apply this over and over and over again until you get it right. Backtest it and make sure that you get it right. And there you have it. Market structure, key levels, confirmation. Practice this 3-step process on your demo account before risking it on real capital. If you have got value from this video, please consider leaving a comment, like and subscribe so you'll be able to grow, and I'll see you in the next video. Have happy trading. I'll see you in the next one.